Gold posted another bullish week and has closed above 2002 levels. But yes, most importantly, it has not yet breached the previous highs and only achieved close to 2008. Does this mean that can we expect a reversal? Because if you see the symmetry from here, these two candles red and these two candles green, same highs, and the preceding candles were greener ones. So can we expect it to reverse from here, or is it going to give a breakout on the upside? Which position you should take trading gold next week? We will see with the help of charts, followed with indicators, as indicators do give us good intimation about what to expect. Like here on the weekly charts, stochastic is overbought while MACD is just crossed over and looking upwards. So possible bullish indication, yes. And towards the end, I will give you the summary of the observation and the trading levels. Watch till the Let's have a look at the 4-hour charts first. On the 4-hour chart, see, taking the support from the 20-period moving average, yes, we have seen a slight reversal sign, and since then, gold has given 3 bullish candles here. At the same time, if you observe, it is still giving lower highs and higher lows. So on the 4-hour chart, this is still under consolidation. We need to wait for it to break out beyond 2010-2012 zone. Last week also, I have mentioned the same levels, that any breakout beyond 2010-2012 should take it towards 2024-2025 levels. But right now, it is still very much under consolidation, yielding higher lows, lower highs. Also, if you look at the moving averages, this is the 20-50-100 exponential moving averages. These are looking upwards, trading with divergence after crossing over here few days back. If you look at the stochastic, this is looking upwards and staying bullish. And if you look the MACD, now see, MACD stayed bullish here. It is achieved high. See, lows were at -10, highs were at +10, and after achieving close to double top levels, it has retraced a bit. Now again trying to cross over. Now this crossover and divergence is what I will look forward to. It can stress the rally further. If it gives a breakout, it can stretch the rally towards +20 levels as well. RSI is rising. This is also a good bullish indication for the coming week. Now let's have a look at the daily. Now first, let me show you something on the long run. See, triple bottom rise, retracement, higher highs. See the retracement, same levels, 1800, 1800. And if you notice this, it was trading in this bearish channel, and since then we have seen this breakout. Now after this bullish breakout, it is retraced and now again trying to rise. Now this is the long-term observation that gold has already come out of this long-term bearish channel in which it is traded for almost 6 months. And the near-term observation, now coming to the near term, if you look at, see, first of all, rise, retracement, rise. Now it is very close to double top. It has already seen almost double top levels. Thus these levels we have to remain extremely cautious and watchful, because forming the double top, there is a possibility for gold to retrace on the downside. And if this time it fails, this is not the lows which it is going to break. It can break below this zone. First target should be at around 1910, 1980, 90 zone, and then below that it can try to fill the gap. So I will be definitely watchful at current levels. Now also on the daily chart, see, after forming the bottom here, rise, retracement, rise, retracement. And if you see the greener candles, you will find that it is still giving you lower highs. The last trading session failed to break past this high line here. So I will wait for a breakout, and this breakout is only about 2010-2012 zone. Next week, if you see gold is staying about 2010-2012 zone, we can expect it to rise more, and this is going to be a stronger rise where we can expect 2025, 2040, 50, and then 2075, 80. Yes, it can climb high if it gives a breakout. Now turning on the indicators, you will find, see, moving averages have crossed over here, are trading with divergence, looking upwards, good bullish sign it is. Next is prices are little divergent from the moving average here. Yes, that's another sign, and but it is still staying bullish, and it can diverge more before converging towards. See what has happened here on the daily charts. It tried to diverge and then converge, and it tried to diverge then converge. So yes, it still has some bullish momentum intact. Also, if you look at, see, this is the bottom here, and since then the rise. Now the top of this channel at around 2020, 2025. So this is something you should watch out for the next couple of days when the market opens. If you look at the daily stochastic, this is almost near to the overbought zone. It is not yet entered into overbought zone. A good bullish candle can try to pull it into overbought zone and stay there for a while. Now look at MACD. See, MACD after a good rise, it has retraced, it has again crossed over, and it is trading with divergence. This is a slight bullish sign here. Now, if you also observe this, see, first of all, the rise was from -20 to +20 530 zone. Since then, it has retraced to the median and again trying to rise. Now, also, you should note that, see, this crossover was coming at a higher levels on the daily charts. Now, daily charts higher levels holds a significance. See, last time what has happened, this time what has happened. And yes, the same pattern can be observed here. Why? Because, see, too much of divergence was seen here, and that is why we can see this convergence and crossover. So possibly, even if it trades for a couple of candles on the upside, it could show the similar reflection where it can try to achieve the bottom here. So be watchful. RSI is rising. That's a good bullish sign. Coming to the weekly. Likewise, on the weekly charts, triple bottom rise, retracement, and again rising. Yes, it has breached the retracement channel. Second observation here on the near term is, now see, I see these two candles as a symmetry of these, and thus you can divide into two, and you can see the symmetry here, same levels, same levels. Now, the next, what was preceding to this was three strong bullish candles. What can follow this will be a possible two strong or three strong red candles. Now, this is only applicable as long as gold trades below 2025-2020 zone. Yes, if you see gold is staying above 2020-2025 zone, you can say that the bulls will take over there and it is going to hit possibly all-time high levels as well. Second observation here is, see, the bullishness getting diminished with these two candles. This suggests, yes, though it tried to rise, but the bullishness is certainly diminished. Next is, see, these candle has formed double bottom and you can see higher lows and higher highs here. So for the coming week, 1980-1970 zone is going to hold a prime importance. Last week it was 1960-70. Now this week you have to wait and watch out how it behaves at around 1980-70 zone if it tries to reach. Remember, forming a longer tail, it can bounce back. But staying below 1970 is where the bears will take over and you can expect a good bearish candle. Another observation here is the little wick on the upside suggests that it can try to achieve higher highs at least 2020 levels. And that is why I say only about 2020-2025 you can treat gold as bullish. Now, if you look at the weekly charts, you will find that gold has taken the support from the 20 period moving average and hence it has started to rise since then. And it is still staying bullish on the weekly charts. Moving averages are divergent. Stochastic is still near to the overbought zone. It has come out of the overbought zone. But look at MACD. See, on the weekly charts, on the MACD, first wave, second wave, and now it has started the third greener wave here. That is the first observation, that it is divergent. It is looking upwards, and if it diverges more and the next week is going to be a greener candle, possibly we can look forward for a further rise in gold in the coming few weeks. But right now, if you notice this, see, rise, retracement to the median, and it is trying to rise. Now if it crosses over, it is also equally important that it can try to hit the bottom here before rising again. Now it is equally poised to move on either sides. Now -50 to +50 move is done. Retracement to the 50%, that is a zero zone, neutral levels, now trying to rise here, and a possible crossover, because why? It is seen a stronger bullish momentum here. This is a partial retracement. Now after the retracement, it is retracing here. It is not a reversal, it is still retracing, and possible crossover on the downside can be expected maybe in a couple of weeks or more. RSI rising. Coming to the monthly. Now on the monthly charts, first you should notice the preceding candle with higher highs, lower lows. That was a major swing candle. And that is why at the month beginning I have mentioned that it is only, the gold is only to be treated bearish if and only if we see it trading below the median levels here at 1890, 1910 zone. If it trades below this, you can say that gold has turned bearish. Now what has happened? Gold has so far formed a very good tail. So what could be one possibility which you can expect in the coming 3 days? Because see, the month is going to end, the candle is turning green, and It has closed the week on a high, so possibly once it stays beyond 2010-2012 levels, we can expect a very good bullish move, taking it till towards 2050 and higher levels. Yes, it could try to rise towards those levels. Now, if you see this retracement, a single bullish candle erasing all the losses from last 5 to 6 months, and this candle has started to rise here as well, and it has formed a good tail on the downside. This suggests that it can possibly look forward to higher highs. Now, if you look at the stochastic on the monthly charts, this is rising, while MACD on the monthly charts is also looking forward to a rise here. It is preceded with a strong bearish move, and since then it is crossed over. It is now trying to diverge more, trying to stabilize. This suggests that the current candle or the current monthly candle could close in green. RSI almost flat. So now we have seen the charts, we have seen the indicator. Time for me to define the trading levels and strategy. And before we proceed, if you want to learn this art of trading, you can join my 28th mentorship batch. 27th mentorship batch started on 28th of November. Now 28th batch bookings are open. Reach out to me for more details via Telegram or email. Also, you can find the details related to the batch on my platform www.forexfunda.com. This platform has much more in offering, be it the economic calendar or the live charts from across the globe or the availability of the experts. These are the three key features, along with the breaking news, where you get the global breaking news which can impact the markets. And yes, the most important part is the vibrant community of traders. So yes, you can post your queries, you can discuss with your like-minded traders. So do visit the platform forexfunda.com and be a part of my signals channel, where you can trade as per the signals on Telegram. Reach out to me again on Telegram or email for more details. Now first, let's talk about the levels to buy. I will recommend you to buy if you see gold staying above 2006.5 levels. We can expect 2010. Now remember, 2010 2012 levels are going to be the key resistance levels on the upside. Once it stays beyond 2020, one can look forward to 2020, the first target, and 2024, the next. This is the next resistance zone here on the upside. Be careful at around this zone. Once you see gold staying beyond 2020 2024, you can stay bullish here. We are looking forward to 2040 2052 levels, and if it stays beyond this, it is going to also break past the all-time high levels at 2070 2080. Be careful at around this zone. If it tries to rise beyond 2012, this 2020 2024 is going to be critical resistance zone. If it stays above this zone, do not think of any look back in gold. It is going to fly high. Now on the downside, I will recommend you to sell here at 1996 levels and expect it to get a resistance at around 1991, the first resistance. See, very nearby on the downside, 1987, 1984, 1980. And in fact, below this, I will say 1974 and 1970. Now for the coming week, as how we have seen 1960-70 as a greater support zone for the last week, and precisely gold has respected the support zone. For the coming week, this is going to be the support zone, that is 1970-1980. If it trades below 1970, we can look forward to a very good fall for 1960, 1954, and once 1954 is taken, then major bearishness can be seen for 1940, and then on the downside 1910 and below levels will be seen in the coming few sessions. Thus take your positions accordingly. Gold has come to a critical level where it has to take a direction. Trade with a stop loss, trade with a trailing stop loss. Stay cautious with the caution zone between 1970, 1925, $50. And yes, do like, share, subscribe and comment. Join my mentorship batch, join my signals channel. Reach out to me for any of your trading or trading queries. Thank you very much. Have a great profitable trading week ahead. See you again on Monday with more details on the daily charts. Thank you very much.